Hello, everyone. Happy Thursday. Hope everybody's having a great day. I am a little under the weather today, which is why I am wearing my hat because it's keeping me all nice and toasty. So in case you're wondering why I'm sitting here with a winter hat inside, that is why. Oh, my dogs have decided they're going to growl right at this very moment, naturally. We're going to just push through. It's going to be okay. So welcome to our Tip Thursday today. Today, I am actually answering the most common tax questions I get from small business owners. And we're going to hope that, hey, no ma'am, we're going to hope that the pups cooperate with me. So let's go ahead and dive in since we're already a few minutes late. Sorry about that. We were having some tech issues. I think we've got everything figured out. Hopefully I do this correctly. Let's see. Yep, that looks good. We've got our slides. We're rocking and rolling. What happens when I do that? Nothing. Excellent. Perfect. Okay. So most common small business tax questions. These are the ones I get all the time from folks. If you are here watching live and you've got other questions, post them in the comments. If I have time, I will get to them. But fun fact, today, right after this live, I am hopping into the free Facebook group, the Badass Moneymakers, and doing our monthly Q&A in there. So if you're watching me here on the Facebook page or over on YouTube, head on over to megkwheeler.com/group. That'll take you straight to the free Facebook group, the Badass Moneymakers, where I'll be hopping off of this live and doing my monthly Q&A inside of that group. So if I can't answer your question here today, I will definitely answer it over there. All right. So the first question I get a lot of, or I hear often from business owners is, do I need to file a separate tax return for my business? It's a great question, and the answer is fairly straightforward, actually. If you are a sole proprietor or a single member LLC, then you do not have to file a separate tax return. You're going to report the profits or losses of your business on Schedule C, which is a form that gets included with your personal tax return. The Form 1040, that's your personal tax return. Schedule C is where you're going to put those profits or losses from the business. Now, it is possible in some states, if you've got a single member LLC, that they want you to file a report for that single or a tax form for that single member LLC. So keep that in mind on a state-by-state basis. You may have some separate filing requirements, but generally speaking, sole proprietors and single member LLCs are going to get included in the personal tax return, certainly at the federal level. Now, if you are a C Corp or partnership, or you elected S Corp status, so whether you were a corporation and elected that status, or an LLC and elected that status, there is a separate return for you. So if it's a C Corp, it's Form 1120. If it's a partnership, it's Form 1065. And if it's an S Corp, it's Form 1120S. It's a separate tax return. It has a separate tax deadline. It's earlier than the personal return in some of those cases. And to just make sure that if you are one of those, that you do in fact file a separate tax return. You're still going to report the profits and losses from the business on your personal return. In the case of a partnership or an S Corp, they flow up to your personal return. So in those cases, that separate tax return is information only, meaning you're not going to pay tax at the S Corp or partnership level, but you do have to report information at that level. So make sure you get those returns done. Okay, our next question. I get this one all the time. What expenses can I deduct through my business? This is probably the biggest area, I should say, where business owners spend their time when it comes to taxes, trying to figure out what they can and can't do. Because of course, your expenses lowers your taxable income, which lowers your tax liability, increases your tax savings. So this is a big question I get. I'm not going to go into every single deduction or expense today. I've actually got a whole training on that inside of my Biz Money library, which you can get access to by going to megkwheeler.com /free, I believe it is. So again, that's my Biz Money library. I've got a what's deductible training inside of there that you can access. But I am going to go over the basics today because I think it's really important that you understand the general concept, and that'll help guide you as you're thinking about what can I and can't I deduct. So the first thing that's required in order to deduct an expense for business purposes is that you have to carry on the activity for a profit. If this is just a hobby, let's say you like to sew and you buy lots of yarn and needles and all of that, that's not a business expense unless you're actually carrying on that activity to make a profit. Now, it doesn't mean that you can only deduct expenses in the years where you have a profit, but it does mean that your intent has to be to have a profit. So for example, if you are in the first year of your business and your business ends up being at a loss, it doesn't mean you can't deduct those expenses as long as you were doing the activity to actually bring in a profit. However, if you do go through a few years of losses, the IRS might raise the red flag and say, is this really a business or is this actually a hobby? And be prepared to justify why it is in fact a business. Sometimes that is legitimate. Sometimes businesses go through slumps or they're in a development period where they are going to have losses for a few years, and that's normal. But be prepared to justify that if you go for more than 3 years, let's say. The next requirement is that the expense is ordinary. And when we say ordinary, we mean this is an expense that is common and accepted in your industry. So I'm a CPA. If I had an expense on my books for, let's see, what would it be? For, renting gym space, that's not common and accepted in the tax accounting industry. On the flip side, if I'm a fitness trainer, that's probably a very legitimate expense in that industry. So it would be allowed, not allowed in the case where I'm a CPA doing it. The expense also has to be necessary, and people get really hung up on this idea of necessary. It doesn't mean that it has to be absolutely required. What it means is it has to be helpful and appropriate for your business. So again, and this is, of course, there's not a clear line here. This is about using your best judgment, but the expense should be something that, doesn't raise any eyebrows if you're going to spend money on this. So for example, if I'm a CPA, let's say I go rent a co-working space to meet clients in and to take calls, that feels pretty helpful and appropriate for my business. On the flip side, if I go rent a luxury suite every day at a fancy hotel to take calls and meet clients, that's probably not as appropriate for my business. And so that the IRS would probably disallow that. So again, thinking about what feels necessary. Okay, the next question I get, I get this one a lot, and this is the one that I always hate answering because that usually makes people unhappy. So I'm sorry, I'm going to make you unhappy probably. But the question is, can I deduct gifts to clients? And the short answer is yes, you can, but there is a limit, and the limit's pretty low. It's $25 per person per year. Now, if you have, let's say you're a real estate agent, you have a husband and wife that are your clients, you can give each of them up to $25. So you can give them something that's $50 for the, per person per year. But you can't just if I were a social media manager for small businesses, I can't give my client a $50 gift and claim that 25 is for my client and 25 is for their spouse if their spouse isn't really a client of mine. That doesn't make sense, right? So $25 per person per year, it is pretty limiting. It doesn't mean you can't spend more. I spend more in my business. What it means is you can't deduct for tax purposes any more beyond the $25. So the way you do this, if you're going to spend more, which most of us are, is when you put it into your accounting system, I like to split the transaction. $25 goes into a category that I call tax deductible gifts. And the other amount, whatever it is, the excess, goes into a category I call non-deductible gifts. You can also do this separately on a spreadsheet, but just make sure your accountant gets it and your return gets filed properly. Also keep in mind that shipping and engraving costs are separate. So if you spend $25 on the item and then another $10 to ship it, that $10 is allowed. I also get a question, and I was actually just looking to see, do we have this as a question? No, we don't have it as a separate one. I also get the question a lot about, well, what about promotional items? If I stick my logo on it, does it count? Promotional items that are $4 or less per item with your logo on them can count. That's perfectly fine. They actually consider that more like a marketing expense. But if you buy, $100, I don't know. I'm trying to think of something that's $100. If you buy a $100 candle, I don't know why a candle would cost $100, but if you buy a $100 candle, slap your logo on it, no, you can't get around the gift limit. You're still limited to that $25 per person per year. All right, next question. Can I deduct charitable contributions? I love hearing this question because it tells me that business owners are being generous, and that makes me really happy. The short answer is maybe. So your charitable contributions flow through to your personal return for most business types. The only type this isn't applicable to is a C Corp. If you're a C Corp, yes, you can deduct the charitable contributions at the business level. That's fine. Some limitations, but generally fine. But if you are a sole proprietor, if you are a single member LLC, if you are a partnership, if you are an S Corp, the business can spend their money on charitable contributions. That's fine. But the deduction isn't going to happen at the company level. It actually gets separately stated on the return in a completely different spot. And what happens is it then flows through to the individual partners, owners, whomever, shareholders, whomever. and they report their portion of those charitable contributions on their return. So if you're in a partnership, 50-50 partners, the partnership spends $1,000 on charitable contributions, each partner can report $500 in charitable contributions on their personal return. Now, remember, individuals have limitations on charitable contributions. You're limited up to a certain percentage of your adjusted gross income. And you also can generally only deduct charitable contributions on your personal return if you itemize your deductions. So you can't deduct them if you take the standard deduction. That is different for 2020 and 2021 because of the COVID-19 pandemic. Congress passed a special exemption, basically allowing for folks to take up to $300 total in 2020 or $300 per person in 2021 as charitable contributions, even if you take the standard deduction and don't itemize. But that's going away at the end of 2021. Starting in 2022, we'll be back to the old rules, which says that you can only deduct charitable contributions if you itemize on your personal return. So my dogs are going to start barking. That's there's a lot of barking going on right now. We're gonna kick him out of the office so they stop barking. Okay, so back to our questions. So just keep that in mind that generally, yes, you can deduct them, but they get deducted at the personal level and you are subject to any limitations at that individual level. Okay, our next question is, we're getting close to the end. Our next question is, do I need to pay quarterly taxes? This is a question I get a lot. And I'll tell you, the answer is often very surprising for folks. A lot of my clients come to me first time, they're new clients to me, and they are very surprised when we start talking about quarterly taxes because a lot of business owners just don't realize that this is something that they have to do. So the answer very simply is that yes, you do need to pay quarterly taxes if you expect to owe at least $1,000 when you file your tax return. A lot of people get confused by this and think, oh, I only have to file quarterly taxes if I'm a business, or I only have to file quarterly taxes if X, Y, and Z. And the reality is quarterly taxes have actually nothing to do with your business. What they have to do with is you as an individual having a tax liability that's unpaid when you file your return. And that could be because you didn't have enough tax withheld from your paychecks. It could be because you have a business and the business isn't withholding tax on your behalf. But what ultimately matters is looking at your entire tax picture, all of your income, W-2s from wage jobs, 1099s, if you've got business income from a business entity, rental income, whatever it may be, looking at all of your income, and of course, all of your deductions and exemptions, and determining if you have a tax liability at the end of the year, and if you've had enough withheld for taxes to cover that liability. If you haven't, and that underpayment is at least $1,000, then yes, you owe quarterly taxes. You've got to pay them throughout the year. I'm not going to get into all the rules about them on today's live. I've got a blog post on them. I've got tons of videos on them. Definitely check it out. Lots of resources inside the free Facebook group, the Badass Moneymakers. But just keep that in mind that you will owe quarterly taxes. If you do not pay those quarterly taxes, you will be subject to interest and penalties on any underpayment of taxes that you ultimately do pay. Okay, so the next question I get a lot is, how do I take the deduction for my home office? This is one of the most popular deductions, I would say, because it can actually be a decent amount of money depending on what you spend on your home expenses and depending on how big your office space is within your office. So the answer to this one is here, and hold on. Okay, gotta love the dogs. So the answer to this one is, so first and foremost, can you take the deduction? You can take the home office deduction if your home is your primary place of business, meaning it's the primary place where you do your work. So you don't have a storefront or a main office that you go to. Home is your primary place of business. And if it's used exclusively and regularly for business purposes. So exclusively meaning you only use the space for business, and regularly meaning you regularly use it. You can't just use it 1 month out of the year and call it an office space. It does not have to be its own room. It can be a space in a room as long as it is separately kind of, stated, like it's very clear to tell what is the business space and what isn't. And again, you use that space exclusively. There is an exception where if you are, like, let's say you're a hairdresser or, something where you have an offsite location where you see your clients, but you do the administrative work of the business at your home because it wouldn't make sense to do that administrative work at that offsite location, there is an exception for that. I'm not going to get into the rules on this live, but just know that that exists. Talk to your accountant about it. So let's assume you qualify for the home office deduction. What is the actual deduction? Well, you've got two options. You can either do the simplified method, which is $5 per square foot. So square foot meaning the square footage of the space used for business. Multiply that by $5. Or you can do actual expenses, which is a percentage of your actual expenses. So for example, if I have 1,000 square foot home and my business office is 100 square feet, that's 10% of my total home square footage. So I can take 10% of my actual expenses, my home mortgage interest, not principal, just interest, rent if I'm a renter, property insurance, homeowners insurance, utilities, trash pickup, like anything like that, housekeeping, anything that is an expense to maintain that space, I can take. Now, if it's a direct expense of the space, so let's say I had to pay to have my office repainted, that I could take 100% of because it was specific to just my office space. But anything that is for the entire home, you've got to allocate if you're doing the actual expense method. Also, you can't include expenses that have nothing to do with your office. So if you go build yourself a new porch, no, you can't take that expense unless that is the only way you can access the home. So if it's like a deck to hang out on, no. If it's like the front porch that you got to get up on to get into the house, then yes. So again, it's got to be something that benefits the business space. All right. That is it. We got to the end, and amazingly, we did it in time, even though I started 10 minutes late, which is great. So just a few reminders. I am about to head over. I'm going to stop this live, head right into my next one over inside my free Facebook group, the Badass Moneymakers. I do a monthly Q&A session in there every single month where I answer all of your biz money questions, kind of like the ones I answered today. So if you've got questions, join me over there. I'll also have questions that folks have submitted in advance. I'm going to be there in about 2 minutes and we'll get started. And then I just want to remind folks that our spots for our annual tax prep open up on December 1st. We've got an incredible 2022 annual tax prep package. When you are on the wait list, which you can get on by going to megkwheeler.com/tax. When you're on that wait list, you will get first of all, you'll get a reserved spot. Second of all, you'll get advance notice of spots opening up and a special treat. And the special treat is really, really good, and it has something to do with your 2021 taxes. So if you're wondering, well, hold on, what about 2021? You definitely want to get on the wait list because you're going to get access to this special treat. The annual tax prep package gives you everything you need to feel super comfortable and confident about your taxes and your business. It's going to get you your 2022 annual tax return prep. And like I said, there might be a special treat about 2021 in there. It's going to get you your 2022 quarterly tax calculations. So if you are one of those people who does need to do quarterly taxes, we're going to handle the calculations for you. It gets you 4 quarterly tax planning calls, ongoing tax support for the entire year, actually for more than a year because it's through April 30th of 2023. So you get like 16 months of tax support. You get my cash flow tracker, my budget tracker, my profit calculator, my money meetings toolkit, all of the tools I use in my business to stay on top of the money in my business. And you get access to my membership, the Badass Moneymakers, through April of 2023 as well. So grab your spot on the waitlist, megkwheeler.com/tax. It's free to grab your spot. You're not committing to anything today, but it does get you in line. It saves you a spot and it gets you in line to get the info in advance before we open up spots on December 1st. So definitely check it out. I'm going to head out here. I'm going to head into the Badass Moneymakers for our monthly Q&A. See me over there, megkwheeler.com/group. Otherwise, I will see you back here next Thursday.